Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, May the 8th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. We do not know what the market's going to do. Therefore, we create our two main hypos, Hypo 1 and Hypo 2. These are our trade plans. Then we wait for the market to open, show us who's taking control, and then we execute the trade plan that best suits the market. We do also create two alternative hypotheses, which we've been seeing a lot of happening lately, which are our hypos that fit to a trend or a expansion type scenario. This is a subscription room. If you're interested in checking out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, in the pre-market, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you're interested in checking us out, please send me an email at quantumleapfutures@gmail.com. I'll give you access to our live trade room, and you can come in and visit and see what we do during the regular trading hours. So let's take a look at yesterday. Yesterday, our main hypothesis was an open auction out of range, a push down into testing into the value area. We're looking for a move down into the gap close, and then we're looking for responsive buyers to rotate us up into that 75.75, which is right at the year open, and go sideways. Hypo 3 was a gap and go and a failure to get inside of the value. And it looked like that's what we were going to see with this strong move on the open. And it was more like an open test drive than an open auction out of range. But then we came back down. We rejected it again. It looked like they were going to take it all the way up to that 84 and a quarter area. They got to 81.50, stalled out, and then we get this big rotation and we get back inside of the prior day. And what do? They end up coming down and taking out the gap, and then rotating up and closing in around that 69. Remember that 69 area was where the microcomposite VPOC was earlier. It hasn't shifted back up. We'll talk about that in just a few minutes. Let's take a look at the earnings. There's not a lot on the table this morning. We did, let me just, haven't got Groupon yet. The big one, though, is going to be aftermarket, and that's Disney. Pretty sure Disney's today. Are we on the right day? Tuesday. There we go. Yeah, I didn't think we had much today. JD, Valiant, ICPT, but the big one I think is after the market. Yeah, it's Disney. We've got Disney, Electronic Arts, Applied Optoelectronics, and Twilio would be the big one. TripAdvisor, Marriott. So there's a few, but Disney's going to be the main one that the market's going to pay attention to after the market. In terms of the economic news, well, the big one today is going to be 2 o'clock when Trump makes an announcement on what he's planning on do with the Iran nuclear deal. We do have Red Book coming out in 4 minutes, not a really big mover, but Jolts Jobs comes out at 10. 11:30, we've got 4-week bill auction. 1 o'clock, we've got the 3-year note. But everything's going to be premised on what Trump does with the nuclear deal. So just be aware that as we move into that 2 o'clock, the market's likely to get pretty volatile and make some moves. Taking a look at the macro to micro, each day I like to start my day with the same routine. It is a very basic routine, but I do it because it keeps me grounded in terms of where we are in terms of the trend. I start with a monthly and I work my way down. I use a 9 EMA, 20 SMA as my moving averages. That's my choice. That doesn't mean that you have to use them. And basically what I'm looking for is, within that periodicity, is the market, do we have good slope and separation? Is price following, paralleling the 9 nicely, or are we coming down and challenging the 9, or coming down and breaking through the 9 and the 20 and violating the trend and possibly looking at a new trend change? You can see on the monthly, we've had 14 months of one time framing up. February, they broke the one time framing, and we've been testing the 9, and we're losing a little bit of slope and separation, but the trend itself is intact, and it does not even get violated until we get into the 2400s. And that's something to keep a strong eye on, is the fact that we can move back down into the 2480 area and not violate the overall longer time frame trend. And the sky isn't falling if we get a normal pullback. Going to the weekly, a little bit different story. We had this strong upward trend for many, many, many weeks, and then we violated the trend, took it back, and then we failed to hold. And right now, we're below the 9 and the 20. We don't have any slope, but we are getting some separation, so we are seeing some weakness coming in on the weekly. Going to the daily, basically we were starting to see the possibility of a downward trend, but we're in this consolidation mode. And we're right in the center of this balance area. And I'm going to talk a lot about that in just a minute. But let's just go to the intraday, the 4 hour. You can see that the 4 hour was starting to look like it was going to start trending up. Right now we're challenging the 9 EMA and trying to hold above it. If we get below it, okay, and we don't hold the 20 SMA, we've got a naked cross down here at 26.37 and a quarter, and that's within our daily ATR range to get down to that 37 and a quarter. And we've got some singles that we left from Friday that we're going to talk about. Just going down one more to the 30-minute. You can see that on the 30-minute, we've been starting the stair step down, but right now they're trying to get back above and take the upward trend back. So let's look at the structure of the market. And again, I'm just going to give you a little bit of a narrative so that we understand we had this long trend up into new all-time highs. There is an unequalized all-time high. What does that mean? It means that we put an all-time high in the Globex at 28.83 and a quarter, and our RTH all-time high is 28.80 and a quarter. This is why I caution you, is historically, statistically speaking, that this is rare, that this does not come back and get tested, and that 83 and a quarter get equalized in the RTH session. But we tried to hold value up here after putting in the all-time high, and they tried to hold it here at the 28.31.75 area. They gapped down. We came down and came all the way down into that 25.35 and a quarter. It was actually 25.29 in the Globex, and then the buyers stepped in. And since then, we tried to break out to the upside. We got as high as this former naked VPOC at the 09 area, failed to hold the 2800s, and then we come back into the value area, and this value area is huge. It's right from 2718 area all the way down to the 2589 area, which is also just above, and very important to know that the longer time frame microcomposite VPOC, or the most traded price going back to the start of this this upward trend up, the microcomposite VPOC is down here at the 25 86 area. So if we do not hold the 2600s on this next push lower, if we get it, that is going to be a main target. It's also a trip, another trip through the value, and you can see that our month low right now is we went down to the 2591 and quarters, and we bounced. The current microcomposite VPOC inside of this wide range is right here at the 46.75, but this is jumped around. There's three main prices you want to pay attention to. This 46.75, which is the current one, but we had a move up into the 57, but it all started here at the 69 area. And you can see that today, or sorry, yesterday, we have a doji day, and we came up, and the last 3 days that we tried to hold value up here, the naked VPOC was up here. The microcomposite 3-day VPOC was up here at the 69 area. And where did we go yesterday? We went up to the value area high of the smaller time frame, failed to get above that, and came right back down, and we closed right at that 69 75 area. And in the Globex, we've been just chopping around here. We came down basically to the open of the prior Friday, and bounced again, and we went up, and we failed again to hold above the value area. So right now we're in this area which I consider to be undetermined fair value, and likely to see some more chop in this area as we try to mature this distribution zone and determine fair value here. So the key areas to watch: 60 is going to be my over underline, 40 is going to be my key line in the sand below, 84 and a quarter is going to be my key line in the sand above, and I'm expecting a lot of chop, okay, in this area. So if we look at the overnight inventory, is about 90% net short in time and value. So we created a double distribution. We're coming up above the LVN here at the 66.50, back towards the Globex VPOC, which is right around that 69. So I'm looking for balancing of this inventory, and whether or not we hold the 69 is going to be a key to me on whether or not we see a continuation up towards that 84, or we see a breakdown and we come back down towards that 57 first, and possibly 46.75, and even that 37. So let's take a look at our levels here. Our overnight high is up at 72 and a quarter. Our overnight low is down at 58.50. Our VPOC is not likely going to shift, although it could. It's going to be 68. Just inside yesterday's IB. And we've got an LVN here at the 66.50. Oops. So, the inventory is not giving us a lot of information. It's more short than it is long, but inside of this balance, we've got to be prepared, okay, for anything to happen, because it's such a wide area, and we've got so much undetermined fair value, and we've got news that can move the market this afternoon. Also this morning with the jolts, we could get a move. So typically, my hypo 1 and hypo 2 are going to be equally weighted, because it's just a matter of where they move at first. I think overall we're going to see a downward skew into the news, because the market's going to be jittery, but we have to wait for jolts to come out. So my hypo 1 is a open auction in range, just outside of value, a push up in to close the gap, and then a push into the 72 area, and somewhere between 72 and the 77, I'm looking for responsive sellers to step in, rotate us down, test the range low from yesterday and the week open, and push through down into the 60 area, and then balance down here and go sideways between 60 and 57 and into the 2 o'clock news. And then based on that, we're either going to get a big move up or we're going to get a breakdown. And, I can only take us so far up until the news and see how the market reacts. Targets to the downside, if the market reacts badly, is down here in the 39 to 36. Our daily ATR, 20-period full session average to range, is running at 36.44. So off of the overnight high, our downside daily ATR target is at 35.75. And then subsequently, our daily upside ATR is up at 26.95. What does that mean? It means that we can move up towards the 2700s, or we can come down into the 2635s without expanding our 20-period range. Can I just move that? Hold on a second. Just accidentally moved a number in one of my TPO singles. I'll have to go and adjust that. Oh, it's 39. Sorry, I just sometimes when I hit my screen, 39.75. So we do have these TPO singles down here I wanted to mention to you. There's one at 39.75, 28 and a quarter, and one at, I thought there was one at 28 and a quarter. No, there was no one underneath that. So again, hypo 1, open auction, push up, failure to get above the prior day value area, rotate down into the 60 area to 57 and go sideways into the news. And then on a breakdown, possible move down into the 39 to 35, and on a push up, somewhere up into the 2690s. Hypo 2 is going to be the opposite. I give it equal weight, open auction, in range, out of value, a push down to test the over underline and the overnight low. Find buyers down here, rotate us up into the 77 area, and then go sideways in the upper distribution, fighting the year open here at the 75 area until we get news. And then the same thing. The market's going to react positively or negatively based on what the announcement is on Iran. Hypo 3 is going to be a breakdown day because we had a doji and we have left these TPO counts. I'm looking for an open auction. Failure to get above the overnight high. Fail, break down into the 57 area, chop in this area, then fail again and come down into this 35 to 39 coming into the news, and then based on reaction, a possible failure and a test down to the next key line in the sand below, which is down at that 26.12 and a quarter, possibly even into the 2500s. That is hypo 3. Hypo 4 is a open auction in range. Failure to break below the the low of yesterday. A push up into the 77. Accept the price from yesterday's VPOC and push up into this 84 key line in the sand and break above and come into the news up here in the 90. I think hypo 3 and hypo 4 are less likely to happen. The reaction, I think the big move is going to be off of the news. There is a fifth alternative where we open auction and we come up and we get stuck inside of yesterday's value area going into the news and come into the news in around that 72 to 75 area. That is my fifth alternative. Taking a look at gold. Gold continues to show weakness. Come on, I'm trying to move my profiles over. Current balance is here in the 14. We failed to get above. Remember how important we were talking about that 1919 area, and that we'd likely go down and test the 1300 if we failed it. We failed it. They failed it again on the retest above, and now we're moving our way down. And the value area low is down here at the 130860, which is also the low overnight. A break below that, look for a quick move down to the 1306 and the 1304. 1304 becomes our key line in the sand below. Anything below that, I don't think that the 1300 is going to hold. I think we get a bigger move down into that 1290.80, which is our magnet. It's our composite VPOC going all the way back to October the 24th, 2008. In other words, there was a huge amount of business being done here. And if we don't hold the 1300s, they're likely to come back down there to see if they can pick up buyers down here again. And if that doesn't hold, I'm looking for a bigger move down into the 1279.70. But that's not going to happen today. Anything above 19, look for them to come up into the bigger balance, back up in the 22 to 29 area. Anyway, that's a quick look at gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.